Okay, good morning, traders, and welcome to Trade the Structure. Now we're just coming into the Asian market session, so it's timely to have a nice review of what happened overnight. Now, as it played out, not much happened overnight. The US was a bit mixed, so you got the Dow up, and I think the Nasdaq actually was down, which dragged the S&P, the larger S&P 500 down. So we've got Powell talking tonight. So it's about 4 a.m. Sydney time tonight, and before that, before the US session opens, there's retail sales which are going to be construed as obviously inflationary. So it'll be interesting to see how the market goes tonight, especially if those inflation numbers continue to power higher. We've got gas prices in the US are just powering higher, which is dragging oil prices up as well. So that's really just adding to any concerns of inflation, which and faster rate rises, which I would expect to keep this market down. Yet it has been extended to the downside, and could easily just sort of find some love or some bargain hunters to drag the market higher. So we'll kick it off with the S&P 500. Now it's holding below this level at 40.41, and I expect that it could. It could easily just hold above these MAs and sort of grind its way higher, but it's got lacking a lot of conviction on the upside. So you can see that momentum starting to pause and start to back off, and it's not really extended at all on the upside. Yet it's just sitting on top of those MAs now. It could do this, a bit of a spike on the open, spike in this level, and then fail. We could just fail straight off that level, but I think it's going to have a lot to do with retail sales. If they come out roughly in line, they'll be waiting to see what Powell's got to say. Okay, so for me, it's sort of an each way bet on the S&P. Of course, that's gonna be really depending on what the Nasdaq does. And the Nasdaq is still, it was a choppy session, pretty much a range bound session. You can see it opened up, tested low, tested high, tested low, tested high. So it was just really range bound, below the previous session's highs. So we've got this. I mean, if you look at that, you've got a sort of minor double top up here, retest fail. Then you've got another one just below that level. It doesn't mean too much. The market could just as easily roll over as it could of just flushing that low and ramping straight back up again. Okay, so momentum like the S&P is slowing there. So pretty much those two go hand in hand. You're looking at the fangs to get an idea of the Nasdaq, which is giving you an idea of what the S&P 500 is going to do. So at the moment, we've extended into that level that we spoke about. You got the first leg down, secondary leg down, extended into there, reacting back up and off that level. So just because we've got an anchor to the downside doesn't mean we've hit this level, doesn't mean we can't keep going down. So the anchor to the downside, which I'm assuming is around that 12, 5, 10 level. If that breaks, then we could get some back and fill, a bit of a push back up of this leg down just to squeeze out some of those sellers. On the Dow for now, we are holding, that was up. It was a bit better than what you saw on the Nasdaq and the S&P. You sort of got this chop on the open and then had a bit of a spurt up during the session and backed off into the close. So it was really a nothing session. I think the action lately has been dominated intraday. You're getting intraday traders sort of exacerbating those moves on low volume, low liquidity into the market at the moment, so they can sort of chop around the market. They can flush it higher, flush it lower, and algos are doing their rips every now and then as well. They love it with the low volume coming through because it's easier for them to push the market each way. Okay, so I think that's what's more happening. You've got the longer term investors are more concerned about what's going on, and everyone's talking about this massive sell-off, once in a lifetime sort of event. Yet it's not happening at the moment. We've always thought these rate rises were going to pressure the market down. They are, but this is not an out of control market. It's not a free fall at all. Okay, it's been a big controlled move down, which suggests that we could get some upside. It could be a longer term thing. We don't know just yet, but all we can do is trade what we see. All right, so at the moment, this market is it's not extended to the downside. It could get a bit more extended than that. So we could hold this as a lower high and pressure down into this zone, below 31,000. Or we could just sort of grind back up, holding these MAs on the way up. We'll wait and see how tonight pans out. Over to the DAX, European markets. Excuse me, the DAX is holding up a lot better than what I thought, to be honest. The bigger picture, you can see you've got good sell-off quite hard, and it really accelerated to the downside down here. Now, the start of that trend down was a bit more choppy. It could be what we're seeing now, or this is more of a control move. We may not get down to these lows. I mean, at the moment, we don't know. It is holding a trend down. You've got a high here put in place. You've got lower high, potential for another lower high. We might get a little spurt back up. We might get a spurt up to 14,170 tonight, which is only about 80, 90 points away. No, it's not. It's 190 points away. My maths is not so good. That could easily pop up and then fade, come into the US session. So don't be surprised if we do get a bit of a ramp on the open, which they love to do, and then fade. Okay, drag in some buyers and then squeeze them back out again. Okay, otherwise, we could just fail below these highs. at 14.043. So 50-point rally into the highs, retest them, flush them, and then dump. Okay, we'll just wait and see. But either way, the longer term trend's down. It's not as as vicious as the previous move down, but it's got the potential to roll over if everything gets out of hand to the downside. Now the UK, the FTSE, a lot of the same. You've got big flush down, big bounce back, and now we're sort of more choppy on the way down. So it is getting buoyed. It's strange to see with all this talk about interest rate rising cycles, and we've got interest rates going up, but it's more about what's the market factored in, and where else are going to put their cash at the moment until they raise rates. I think bonds are going to be, they're attractive at the moment, but there's not much difference. I think there's a lot factored into these equity markets where they are. I think potentially they're, especially the US, a little bit too high. Maybe that's a different story now that we've had the sell-off and it's been more controlled down, which means that we might get some more bargain hunters back into the market. It's hard to say at the moment, but either way, looking at levels on the FTSE, 74.80 is probably the prime target for tonight. We're going to see what, if it just jams straight up and through that level. Wouldn't be surprised if we do something like this, flush up through the level and then fail off a minor double top. We could just pop up, back down again. So just be wary. It has been a decent move up yesterday, good sort of handy move up. With the US not doing too much, we might fade and people might be wanting to lock away some, anyone that's been buying off this level might want to lock away some short-term gains ahead of the US, because I think the Powell comes out and starts talking after this market will close on the index anyway. All right, over to the Asian market. So we'll start off with the XJO or the ASX 200. We were speaking about this level yesterday. It's come down to that level, little minor flush into there, bounce back, lower high, and the low high flushed the previous low before we had a good strong bounce back. Okay, so bounce back Friday, and then we flushed up and straight back down again yesterday. So we took out the anchor. So this is the trend down. You've got these lower high, powerful move into that 69.70 area before we got a bounce back. We've taken out the anchor here, and then we took out another level at 71.24. So it'll be interesting to see whether we can just sort of chop around and hold these MAs today. Okay, see if we can actually hold. Potentially we might have a bit of a flush into that level. The market's meant to open up slightly. It doesn't mean too much, about 15 points or so, thanks to what we saw on the SPY 200 overnight. Expect it to open up slightly, but we could just flush into that level and then start to find some buying. I'm more expecting, maybe something like this, not today, but maybe today and tomorrow, a bit of a bounce high, a secondary leg high, because that's been quite a strong leg down. And we may be looking, we could be looking to sort of this zone here. It's hard to say just yet, but we'll wait and see how that plays out. But either way, I think we found a bit of a short-term low, and we're probably looking for that secondary leg up off a higher low. Okay, over to the Hang Seng. Hang Seng on a daily basis is trying to sort of hold up off these MAs, and the 30 minutes trying to hold up off these EMAs as well. It was a strange sort of an open. It flushed the highs, gapped up above that open. Gapped up above that level at 20,080, and then straight sell-off. Okay, and have a bit of a reversal into the close, but we could easily hold a lower high, or we could pop up. So the two sort of levels I'll be looking at, obviously, is boxing that up. Is that level break down below? We could start attacking this level at 19,760 or 770, break up through the highs. We might be attacking these highs and a further bit of a push up again. Okay, so the index, the futures from the overnight market suggest that we're going to open higher, potentially into this sort of resistance zone. But so we'll just wait and see how that goes. Nikkei has showed some strength on the open, but the same as the Hang Seng. Sold off from the open, so it gapped up in the open, which we would have expected from Friday's close in the US, and then bringing the futures market had gapped it up, and then it's straight back down again. So they took the opportunity to sell it back down again. It'd be interesting to see if this leg can keep going, and because we're breaking this downtrend, it's sort of off the cards potentially, and we might be looking to drift back up into this level at 27,030. Okay, this sort of high, previous high, which would be sticking to this downtrend, well, roughly. Okay, so we have the potential for moving up today. Overnight, the Nikkei was pretty much range bound. Okay, we had that pop up in the open, sell off, and then we were range bound. We're stuck in a range, so it's probably going to open roughly where it closed on the index. Okay, over the currencies, the dollar index has been edging lower. I suggest that's just more of its unwinding of longs, probably triggered by that. Safe haven might have pushed them higher. Safe havens are getting out because the market's not rolling over. Probably the market's expecting a bounce, or they're expecting a bounce into the indexes because we've been so heavily sold. So it might be a case of as the safe havens exiting, you're getting a bit of a squeeze on some of these longs through that 104 area. So I'm looking for that to continue just down to sort of maybe this zone at 104.35, but I don't expect that to get out of hand, in the selling way until we know what Powell's going to say. How is he going to stack it up with interest rate rises? He might come out and say we're going to be more aggressive, and you get a US dollar selling off, and then later on they're not that aggressive as what the market. The same as what happened last time they talked up being aggressive. They weren't really that aggressive or as aggressive as what the market thought, and we had a pop in the dollar. It might be the same sort of scenario. He talks about being aggressive. The US dollar comes down, and then down the track when they don't, they fail to meet the market's expectations, the US dollar starts to pop again. Or he may just say we're going to, he may just disappoint the market because at the moment, gas prices, oil, everything's adding to inflation. It's not cooling like the Fed is hoping. They're hoping I still feel that they're really hoping that it's going to cool and inflation to get itself under control. Yet it's not doing that at all. So I think the pressure's still to the upside longer term on the US dollar. So looking at currencies, you had a nice little bounce. We spoke about this yesterday. On the euro, nice little bounce off this low. You got that flush of the low. So it's just the reverse of what the dollar's doing. The US dollar is exactly the reverse. So that to me looks like we could continue to grind higher, like the US dollar could continue to grind down. Okay, so you've got a breakout zone. So we broke down this long, big move down, consolidation sideways, broke out of that. So we could be just heading to retest into that area at 104.82 or 104.80. Whether or not it can get up there, it could easily spike, but we probably need the dollar to spike lower to get this to kick up into that zone ahead of the Powell speech. So, I mean, you've got a long time between now and a fair few hours, but the market may not want it. Who's going to want to initiate longs? It's more of, is there enough shorts still left over to squeeze out of the action rather than longs initiating. If longs start initiating on the euro and start jumping in here and they grind high, they might be up for a while and then bang, before they get a chance, the market dumps. Okay, we'll wait and see. Pound. Now the pound, obviously also got some love, and you've got this sort of flush down through here. You've got this leg up, and if you take that, measure that up, we're probably heading up to this resistance zone, potentially 123.70. It won't take much for it to spike up to that level ahead of Powell's speech. It might be just on Asian market open, or probably more likely on the European session open to see if it can actually spike up. But either way, that's finding some buyers thanks to US dollar. They've also got inflationary numbers, not tonight, not in the European session that's coming, the one after. Okay, it's coming into tomorrow night in Sydney time anyway. So it could be just sort of any shorts getting squeezed out before that number, but longer term it looks like it's still holding around those lows. Okay, Aussie pretty much US dollar selling has brought some buyers into the Aussie, bit of a flush down and sort of bounce back. Either way, that trend is still down like the others. Longer term, the trends are down. We're just getting some sort of pullback or squeeze higher, more of a contraction of that downtrend. Okay, over the US yen. Now US then, I still expect that's going to roll. Okay, and it's interesting. So I thought it may be that it's getting set up for some US dollar short squeeze again and some safe havens that start diving back into the yen. Okay, if safe havens start to dive back into the yen, that's buying into the yen, which is squeezing on those shorts that are built up and sending this pair lower. Okay, so even if the US dollar rallies and the yen rally outpaces the US dollar rally, the pair goes down. Okay, so we'll wait and see how that plays out. But to me, that's looking like it's rolling over. You've got momentum, bit of divergence there, bit of a minor double top into this zone, into that sort of, what's that, 129.50, 55 area. Okay, so that could be, I'll just be keeping an eye on that for a bit of a short. I alerted to that in our Discord channel. Got a Discord channel with a little community we got going. Alerted to that as a bit of a sell-off, and it has headed down since that alert. It's just whether or not they can get a bit of a run on. Over to gold, everyone's favorite hedge, which is far from the truth at the moment. Inflation hedge. Now, I suspect that that's going to continue down until US start continue to raise rates, or they get a bit more aggressive towards interest rate rises. And it's going to be more of a safe haven. I would expect a safe haven buy as opposed to any inflation hedge. Okay, inflation hedge should have happened. Gold should have been going up because inflation is so high. Yet gold has been going down and just squeezing out traders. And don't forget, there's gold bugs out there. I don't understand it. Why you'd be, I don't even understand why gold is a hedge to inflation. I don't see the reasoning. But it is traditionally, that's the way it is. So I think it's more going to be a safe haven bid into gold than anything else now. If US equities don't sell off, gold's going to continue to probably pressure into those lows. Crude just keeps jamming higher and pressuring inflation. That narrative. We're looking to come up into these highs in here, which is around that 116 mark, if I'm right. Yeah, 116, 116.20. These highs, and that's more on a daily basis, and that is actually the same sort of high. So you get tested once, went through, straight back down, retested off it, straight back down to these lows. So it seems to be range bound. But if you step back, if we just go back to that daily, the daily actually looks, to me, that's a bit of a cup and handle, bit of expansion, bit of a big flush higher, pull back below the daily resistance zone around that 113 mark, and now we look like we're starting to break back up again. I mean, this is going to be one of those things. It could be a double top up here, lower high, just into that daily resistance, and then we fade off that level, or we're going to continue to power up. Okay, but either way, it's the momentum's up at the moment. I wouldn't be buying it up here because I think it's way too stretched. You can easily get caught up in the squeeze when it starts to thump back down into maybe this breakout area at 111, 112. Not so much 112, but this sort of zone in here could easily break back down and then still hold that trend up. Okay, so I'm not willing to buy and I'm not willing to sell because it's still an uptrend. All right, copper. Copper had some love, obviously, from that US dollar sell-off. It's still grinding its way higher. Probably going to look up into that 425 area. We'll see how that goes. But for now, it's just linking up to that US dollar. Longer term, the trend is down. Until this level's broken, that trend is down at 425. If that breaks, then we'll probably look for a higher low to work off some longs. But for now, that trend is down. It could roll over easy from here if the US dollar starts to bounce. So there's going to be a bit of action coming into the power speech tonight. Okay, over to some cryptos just to finish off with. So yesterday we were talking about this. It did it opened up a little stronger yesterday, but it faded. Okay, I think it was about, if I'm right, it was somewhere around here. So we opened up here, started the Asian market session. It's just been selling. So basically, Bitcoin's sort of hovering around that $30,000 mark. Okay, and it's not convincing either way. Okay, if it continues to consolidate around there, I would be more inclined to think it's going to be bearish because I'm sort of inclined to think that there's going to be another sell-off into share markets. Now, if obviously the share markets have another good bounce back, then you're going to get Bitcoin working its way up, potentially to that 39, so 34, 100 level, this zone up here. Okay, if not, we consolidate around here and the US starts to sell off again because Powell is going to be more aggressive towards interest rate rises, then expect to see some more downside onto Bitcoin. Now, Ethereum is much the same. It's sort of hovering around a zone. I feel that could easily push into this support zone. So I think Bitcoin is sort of hovering in at 30,000. Another sell-off from there could trigger a whole wave of more selling into Bitcoin. But for Ethereum, it could easily go into that support zone and bounce back. Okay, and I know there was talk about, I can never remember the currency, the big meltdown we had that triggered some selling into Bitcoin as they try to defend it. The fact is that it happened and it's triggered other sellers. Just because that happened doesn't mean we're going to bounce back, because what that's happened is created, whatever the reason why Bitcoin sold off, it's created a bit of fear into Bitcoin. So long positions, if they haven't been squeezed out below 30,000, they're going to be nervous. Okay, and it has taken some bit of a margin reset as well. So, and it's going to potentially, I think, scare some longs off, from adding with a bit of a pop back up above 30,000. It doesn't matter whether it's Luna. I think Luna is the crypto that had a bit of a meltdown, the stable coin, they call it, the peg to the dollar, which hasn't proven to work ever. So I think that could have been a bit of a scam, which has caught people off guard, which is a shame. But the fact is those things happen all the time, and that's where you've got to know where your risk is. If you don't know where your risk is, just forget about it. You're going to get caught. If you can never understand where your risk is on any one trade, even if you're a fundamentalist, on a share or anything, if you're fundamentally, you've done all the research, you still have to know where your risk is, because it's pure arrogance to think you're right. Okay, you have to know where your risk is on any trade. Okay, even if like I said, if you jumped into a share and you thought that's the bee's knees, it's going higher, no doubt about it, then you've got to know exactly where your risk is, because if you're wrong, which it's happened many, many times in the past, you're proven to be wrong no matter what research you've done, you could completely capitulate and lose a whole bunch of cash. Okay, so I think I'll finish it there. We're just about to hit that 20-minute mark. So thanks very much for joining me, guys. Now, like I say, always, it'd be great if you can jump onto our channel, take a look at the YouTube channel, subscribe if you haven't already. Look at our website, www.tradethestructure.com. and join in our community. Jump on our Discord channel. A lot of information on there, a lot of fun people to talk to. All right, guys, we'll speak to you tomorrow. Cheers. Bye.